Hi everyone and welcome to my weekly update with me, Richard Perry, market analyst at Hantec Markets. Each week I take through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've still got the prospect of the dollar starting to correct back. We've seen the Fed take a more dovish path recently, and it's interesting that we've started to see in the last few weeks the market factoring in this progress towards a potential trade deal between, or some sort of agreement between the US and China over trade. Now, that moves into a crucial next phase this week with the meeting between the US and China, and obviously the markets will be looking out for news flow regarding that, and that will be on Tuesday and Wednesday, so keep an eye out for that. We've also got the Fed meeting on Wednesday as well, where we get the announcement and also the press conference. Now, this is a change from what we saw previously, where we're going to have press conferences at every meeting now for Jerome Powell to update the market, so we're going to get more information out of him on that regard. And also it'll be interesting to see if the Fed now starts to officially go down a more dovish path. It starts to set up markets for a bit of a pause in the rate hikes, possibly even to put the Fed quantitative tightening, balance sheet reduction, onto more of a manual path as well. So that would be interesting, and that could have ramifications across markets. So they are two key factors that we need to look out for earlier this week. We've also got Brexit being a key factor for sterling through this week, and also UK markets generally, as the Parliament debates on Tuesday and then has a whole voting process through a number of amendments, possibly to try and steer Theresa May away from a no-deal Brexit conceivably. So that could again have a big implication for sterling and UK prices. So they are the three main factors we're looking out for this week. Also, we're looking at a lot of data points as well this week, so I'll talk about them in a bit, but certainly data is back on the agenda this week as a key driving factor. So in terms of forex markets, well, we've seen the euro, which has been very choppy in the wake of the ECB meeting. Downside move on Thursday, followed by a sharp move to the upside on Friday. Interestingly, back at around a pivot though, 1420, one to watch there in the near term. Still remains stuck range bound effectively between 13 and 15 big figures. But yeah, 1420 is a near term pivot that we need to keep an eye on. In terms of sterling, very much Brexit driven. Seemingly the move in Parliament towards a softer Brexit, or less hard Brexit probably is a better way of putting it, seemingly has driven sterling higher, and that's come throughout the past 2 or 3 weeks. Really strong move that we saw again on Friday, a little bit of a correction on today, but again, anything that takes Theresa May away from a possible hard Brexit or a no-deal Brexit would certainly benefit sterling. Dollar yen, seems as though that differentials are a part to play here, and obviously how the dollar moves, because JGB yields back at 0, which is around about where they the yield curve control puts them. But also what we've seen is Treasury yields starting to fall back, hence why we saw dollar yen starting to come off a bit on Friday. So anything that sort of takes the market into a more risk negative outlook will be certainly a dollar yen driver lower. Onto indices and equity markets, which have again been breaking higher. Now this is really interesting because we saw Wall Street again on Friday pushing higher, not decisively, but still trying to sort of break the shackles of a little bit of a near-term consolidation that we saw. S&P 500 seems to be sort of supported around 2,600 to 2,615, pushing out towards the next pivot line around 2,715. So seemingly buying into weakness there. DAX, very similar, uptrend channel, 11,000 is a key breakout, and actually reopens the upside towards 11,725 area as the next key overhead supply. So there is a nice uptrend channel building on the DAX, weakness being bought into. Now compare that with the FTSE 100, which has broken its uptrend, actually is now in the process of possibly topping out below 6,800. It's a real problem that the FTSE is facing. It seems as though whenever the market rallies, FTSE doesn't really join in that rally so much, and now it's back under pressure again. So it could be a key underperformer there continuing on FTSE 100. On to commodities again. Dollar correction that we saw started to come through on Friday really impacted through the gold market as well. Gold breaking sharply higher on Friday. 22 bucks of upside target is now being implied by the breakout through 1298. If it can hold that breakout on support, then we could start to see the market really testing that key long-term pivot resistance, 1300 to 1310. Really important levels there that we're seeing on the gold market. The consolidation ultimately is still also playing out through the oil market, though. We've seen uptrends being broken on Brent crude, maybe even now WTI. Markets sort of drifting sideways to an extent on those, and certainly the increase in the rig count on Friday in the US didn't really help markets that side. But certainly what we are still seeing is the bulls not willing to give up their gains quite yet. So we're still seeing higher lows formed throughout the consolidation, and it seems to be the big breakout levels are still holding on the oil market. So in terms of how the economic calendar looks this week, it's jam-packed with key data points. It's starting on Tuesday with the US consumer confidence level. That's going to be an interesting point, and then we're looking into the real sort of important data points. We've got the FOMC on Wednesday. That is obviously going to be a key factor. I've sort of talked about that already, but looking then onto Thursday with all the PMIs starting to come through. You've got China PMI on Thursday. We're also looking out for the US core inflation data that the Fed looks at, the core PCE. That's going to be important. You're looking at the manufacturing PMIs on Friday for the Eurozone, UK, US ISM data, non-farm payrolls on Friday. All these are going to be sort of adding to the picture of how the global economy is potentially still slowing, or still sort of in that cyclical downturn moment that it seems to be at the moment, and how that sort of data paints that picture, whether it's getting worse, whether it's getting less worse, will be important to how markets respond to these data. So that's throughout this week. We're going to see a lot more information than we had previously, obviously. And also looking at Eurozone inflation, the flash inflation data for Eurozone on Friday. Again, a key data point as to how the euro can perform in this market that seems as though that it's becoming less positive about the euro. So with that in mind, I wish you good luck in your trading, and I'll speak to you again next time. Thank you.